Welcome back. We've got a rally underway this morning. Take a look at futures. We are at the highs of the morning. Dow Industrials now up 119. The Nasdaq up 73. The S&P 500 higher by 20. We just got breaking news from the European Central Bank. European markets are higher after the ECB took interest rates higher by 1/4 point, up to 4%. The FT 100 is up 73. The CAC Cross up 22, and the DAX index is higher by 25. The ECB's 10th increase in rates in a row. Of course, the Federal Reserve is meeting next week, two-day meeting, and we've already seen 11 rate hikes out of the Fed. Joining me right now to look ahead is MacroMavens President Stephanie Pomboy. Stephanie, great to see you. Welcome back. Your reaction to the ECB move, and what are your thoughts going into the Fed meeting next week?
Well, thanks for having me back, Maria. I think the central banks are really in a bind, obviously, to state the obvious. We've got a real problem in terms of slowing growth and stubbornly high inflation. And the real problem is, looking at my screen this morning, we have oil that just broke over $90 a barrel. So we're really going to be in this situation for a while, unless you think there's going to be some dramatic change to our domestic energy policy. So this is really the issue for investors, is that oil obviously feeds through everything. So it's not just an issue of higher gas prices, but, you know, when you buy a box of cereal at the grocery store, a huge portion of what you're paying for is the oil involved in producing the wheat or whatever goes in the cereal and then getting it to the store. So this is going to hold the inflation numbers substantially higher in the face of slowing economic activity. And I think this will be a two-pronged issue for investors, because it means interest rates are not going to go down, certainly not anytime in the foreseeable future, which they're heavily betting on. And number two, it suggests that the relief that we're starting to see on the corporate profit margin front is going to reverse swiftly as these input prices start to outpace the ability to pass them on to consumers who are now clearly spent up and lent up, as judged by their reduced credit card borrowing recently.
Yeah, it's a great point. And the Journal goes through it this morning in the front page, how energy and labor costs are cutting further into some corporate profits. And they're talking about American Airlines cut on Wednesday, its quarterly profit forecast. You know, you've got UPS this week expecting to book contract-related costs as a result of the high price of oil. So it's rippling through the economy. Is it priced into the market yet, Stephanie? We're waiting right now. We're a minute and a half away from the August producer price index, but we've also got the retail sales number coming out. And up until now, the consumer has held up. So are we going to see a change in that? What are you expecting from this inflation and retail sales data coming out in about a minute's time?
Well, I absolutely don't think the market is pricing this in. They've pretty much ignored what the Fed's been saying since the beginning, you know, higher for longer. And the for longer part, they seem to cheerfully ignore. And there's nothing about this inflation data that suggests that for longer isn't going to be the case. As to the consumer, you know, the strength in the consumer is a little bit of an illusion, because it is driven by inflation. Consumers aren't buying more units. They're paying more for the same amount of stuff.
That's a great point.
Reflected in real retail sales, which have essentially gone nowhere since April of 2021. That's more than 2 years, despite massive fiscal stimulus. That consumers have really not increased their total purchases, but are just paying more for everything. So I think that's really important to bear in mind. And you see that reflected in consumer sentiment numbers, which remain deep in recession territory.
Yeah.
And after ramping up their credit card borrowing, we just saw last month that they really slowed the pace of credit card borrowing. So I think they've hit the wall.
Yeah.
And they're pretty exhausted, but we'll find out shortly.
Yeah, and yesterday we reported that incomes are down for 3 years in a row. Higher gas just cuts right into that. With oil prices now at $90 a barrel, we are imminent away from the numbers here for retail sales and the PPI.